Welcome to the Breakfast Club. My name is Darren Hancock, and here we are on Tuesday, the 13th of May, 2025. And I wish you all a healthy, happy, safe day. I hope everything turns out just the way you want it to. Let's look at the markets we got right now. This is the hourly chart. Now, let's look at this level right here. So we traded below it, but we just traded back inside this range here, right? From low to high. So we just pop below into the discount portion of this little range right here. And then you got to look at this BISI. So you got a BISI here, a SIBI here. So this SIBI, we trade back and through it, but we have this BISI right here. So what my concern was whether or not we would get through more than 50% of this BISI on the downside. So it's kind of like a graded response. You want to see that come back down inside this, find some support and go higher. If we close below that level or below 50%, I was looking for the potential for this to continue to come lower. So these relative equal highs above us here, I didn't think they were going to leave those untouched. So I did catch a long right in here, and I just took it to the 8:30 open last night. I took it right here and got out right there. So that's where that went yesterday. I wanted this 50% to hold price, so I had my stop loss sitting down here and just let it run while I went to bed last night. So it worked out. Didn't aim for the highs. I was going to hopefully get those this morning. Like I was looking for a retracement back in here before taking those highs, but it ran straight through. So, okay, so here's your 4-hour fair value gap inversion above you, and then we have this big daily imbalance above us. So that's my target for today, is to look for this to go higher. We get a retracement back into these old highs here. Like I want to see it close above this, come back, find some support at that candle, halfway through its wick, all the way to these candles open and close, and then find some support there and go higher. So I want to see a fair value gap forming right here, preferably above these two levels on the hourly, and then come back and find some support. So 10 o'clock give you that false, 9 o'clock, 9:30 give you that false Judas swing back into here, and then start accelerating higher. That's what I'd like to see. That's what I'd like to see. So that puts you right back to close to the 8:30 open from yesterday. So 8:30 today. Puts us right here. And this is Tuesdays. Come on. And I don't think I put the 6 o'clock on there yet. I was up when the midnight open ran, so this would be the 6 a.m. candle here. Make sure that 4 o'clock. Okay. So the 8:30 open again. We can come back, tap this 8:30 open. That'll give us those equal highs again. And then I want to see it take off from here. Got 3 more minutes for that. Let's make sure we're still on here. Okay, we're live. Good. I don't want to see us make a new high here at 9:30, 10 o'clock. And then start coming lower. I want to see this, look at Judah swing down, give people the impression that we want to run lower and then continue going higher. That's what I'm looking for. Morning, Hadi, Hans, Campione, good morning. And okay, let's close that down. Let's have a look what we got here. $15-minute chart. 15 puts us back in yesterday's 8:30. Yeah, and the daily puts us back on top of a look at the daily here. The daily puts us right back on top of this here. Will put us right underneath that 8:30 from yesterday. There's a small little gap down in here. I stretch it out. You'll see it sitting there. I like to see us just come back, give that a little tap. And then, which is the high of this candle here. And then start marching higher. That is what I'd like to see. So this second, yesterday's 8:30. That wants to close up above here first, which we did. It's now 9 o'clock. See how we've closed above that level? Now come back and give it a little tap. And see what kind of responses we get off this level here and go higher. And then you want to know if 10 o'clock is going to come back. If this is just going to be a small candle, then 10 o'clock comes back, taps it, institutional order flow entry trail, which is right on the 8:30, and or consequent encroachment. So that's that graded response we're talking about. How we're going to respond on the next candle after this one. We want this to be a relatively small candle for the next hour, and then 10 o'clock, put one right in here, a wick. That's the 9:10 turn, and then continue pushing higher. Let's see if we get that. Let's look at some of these other ones. They've just wicked up through the highs here. So you notice they have not closed above the high. On the hourly versus the hourly that's closed above the highs. They have not closed above the highs. So here I'd like to see this get down into no more than that. I'd like to see it just bounce off of that, go higher. So it's just inside that imbalance here. Well, that's all I want to see. Come back inside there and go higher. If we start to close through this, we rebalance this whole candle and close through it. We're looking for a possible run to 846 to 840, somewhere around there. That's if we lose that high. The Dow on the hourly. Was not closed above its highs. It's failed to get up there altogether. We had a big wake up and then failed. Interesting. So we're still sitting in the middle of this breaker here that takes out that high. So we're sitting at the mean threshold of that. We've run back up to this mean threshold, wicked through it a little bit, came back down like we did here, and now you're pretty much sitting in the middle between these two order blocks. This breaker and this breaker, you're kind of bouncing off of them now. One of them's got to give way. So natural gas, I like this pre-market going higher. We still want to see it get back up into here. Copper. It's closed above here now. It worked inside here. You want to see to start taking out this on the upside on a close and then start looking for higher prices in copper. Real estate. TSX running up for their little high here. Take out those equal highs. And then you're looking for a potential reversal here into June. It's not going to resume back into that. I don't think it's going to resume back to that madness that it was going through before. I think we're going to see a little kickback there. Natural gas, we want to see it again, still get above this level. Get above this weekly fair value gap, find some support at that and push higher. Gold is, I'll get that in a sec. Finally hit our wheat level that we're looking for. Yesterday, finally hit that right on the money. Opened and we're still going lower. So I haven't looked for a new level down there yet, but we finally got that. How many weeks did it take us to get there? We saw this reverse. We're expecting it to go here then. It didn't, came back into that one more time. Used support in here and then finally has made the low. Soybeans, we're still looking for this high in soybeans. It's finally made its little pop up. Closed up above this level. We've come back, found support at that level. Look for this high to get taken now. The rejection block has been hit right on the money. Pay yourself at rejection blocks. We're up and through that level. So sugar. Sugar hit the objective we were looking for yesterday here. We've had a nice reaction off of that. We've worked our way through this level. And now if we can get on top of this with a close, then find support inside this level, leave that open, and let that continue going higher. I haven't got a new high for that yet. Coffee hit our objective right on the money. Yesterday, we were looking for a sell side. It took the sell side and we had a downside objective. It ran all the way through that, hit that downside objective perfectly. And now we've got a nice little pop-up reversal right here. Watch out, this isn't a bull trap. You got to get above this high here and use this candle for support to go higher. If we come back down and tap this, you're still inside this range here. So wait for it to break this high before you consider going higher. This could just roll over here. If it takes that out, come back, find support at this, look for continuation on the downside. Cattle broke through that high and it's now going higher. That's what we're looking for yesterday. You remember our little discussion yesterday morning? This is exactly what these little levels we're looking at, that when you run above them, this is what we're looking for this morning in NASDAQ. This SIBI or BISI here to occur and form above the high and then create a little fair value gap, come back, give those highs a little tap right there, that high, all the way down to re-engaging this level and leave it open. Just tap the high. So you've got that graded response. I don't want to see anything more than that in terms of its run back into the market. If it comes back into the consequent encroachment, that's like my D level response there. You don't want this to fill in. Corn. Corn went through our downside objective here, or came up to this level right here. We did not trade through it yesterday. We closed and then went lower. So we're looking for this next box down here at 434 to 431. And little piggies, they haven't taken off on us again. Let's make sure of that. We are on the 12th. Good. Just got to close above that level here. If you want hogs to go higher. Now it's back inside this level. If this rolls over here now before taking that high, that rolls over, we're looking for this volume imbalance down here again. Oil, what a nice little reaction off yesterday morning's discussion. We wanted to see this fair value get retapped, and it did right at 10 o'clock. So when we were talking about this at 8, 9 o'clock in the morning, we wanted to see this close through here, come back, find support at it. It hit it perfectly at 10 o'clock there. And then you would have had a nice, delicious run for the rest of the day. This immediate rebalance right here, you see that? On the hourly, body trades above it. You trade back into it nicely here. And then you're running back up into this premium box right here. Find support here. I want to see that march up into that premium box again now. Gold. Swept the lows. Reverse. Body trades above it. You come back inside it right here. Go higher. Take out the highs. Larger range. You're more than 50%. If you take this larger range here, all the way to the bottom, 75%. Look at that, body's perfectly sit on the 79% or 79% optimum trade entry reversal, or 75% perfect inside that range. Wait for this level to get taken. It does. Runs back up, creates a new high. Look for time and price. Wait for this to get taken on the downside here. It does right here, and we trade back into it here. So we're looking for more downside. I'm looking for a return back into this box here on gold. That's a 15-minute chart. Hourly chart. You have consolidation, CAM model 1. If that trades back into the bodies here or halfway through into this wick, graded response, low level. See how we've come all the way back to here and we've filled in the fair value gap, busy. You want to see a portion of that stay open. So this would have been a nice response here and then go higher. So I want to see that start picking up here on an hourly. You know what to look for on the 15-minute. You want to see it just dip into here and start marching higher again. This is good. It's actually capping higher now. 850, 1854. So still looking for more upside now. I want to see this daily volume imbalance here get used as support to go higher. Bitcoin. Big old bull trap here. That would have been your trade to run higher, take out that high, pay yourself at that high. There's a swing there. Imbalance. You didn't get a chance to get back in it. You ran below it, ran to rejection block, pay yourself at rejection blocks. You don't always get the lows, right? That's what you would expect, that this to go lower, right? So pay yourself there and wait. Hopefully it's going to take out the low. If it doesn't, then look for this level here. Get traded through on the upside. And I know this is a 1 hour, forget the 1 minute, but we wait for it to trade above it again. Either if you want to go and take out the low, you want to see it trade into it. So you got 1, 2, 3 different entries you could take, and you go, if it closes above it, you go, I'm on the wrong side of this again. You can unload 1, 2 of your positions. The last one, if you would add 3 layered positions, you would have got 2 of them off, and now it goes higher. So that's the indication it gives you that it's going in the opposite direction. And then wait for it to take out the highs. It takes out the highs. There's no opportunity for you to continue getting on there if you didn't get on here. But this is one of those beat you up ones. But if you're watching carefully enough, you can still take positions off if you get on the wrong side and get back in sync with the market. And we've retraced all the way back up into this premium box where we're headed for right now. We're in this one right here right now, and now we're looking for the next one above us. So I'll be looking for up here. Look for that. DAX has come all the way back and fell. What is this, a daily chart? It's just going sideways there. Let's go. Oh, it's a 15-minute chart. We've come back and filled this gap in. I think yesterday we were looking for we traded through this level. We're back into that level. You're in the middle of this zone right here, this whole range. You're sitting right near the middle of it. You have traded back above this level right here, traded back into it. You want to see it go higher. Immediate rebalance right here. And now you're just pretty much stuck in the middle. So I've got nothing for you for DAX right now. Still looking for banks to recover a bit more. They got lots of liquidity above them here. At least this one. I'd like to see if this one reach for here. So far so good with those. Disney, as you decide to rocket away on us again. Nope, still sitting there nice. Today, it's a nice little climber out of there. It's using this level here for support. Look at those levels that we were looking at, finding support at them. Pockets of liquidity. Nowhere else did we mark that it wasn't touching. So look for 112 next. If we can keep on above here, look for 112. Nice. These are all recovering nicely. Now, I gave you guys these back in March. We were looking for a run down into the red box. I wanted this level, didn't get it. Because I saw the potential for some good dividend return and a good return on your principal. And as you can see here, there's 20% return on your money just in April alone. And you get to collect a dividend coming up soon too. And that's another 20% return on your money plus. And that was right in the box, so I didn't take it. Said I would take it, but I didn't take it. Toronto, Dominion Bank ran up above the highs here really good and then start using the highs for support to go higher. So I want to see Toronto Dominion keep moving higher. The concern is that April or May, you take out these highs and then you create this little high and then you reverse through it and start coming back down into June and then potentially a July to take out these lows. This is more high resistance than if it was sitting like this. So let's hope that continues going higher. Now British pound has got above the highs here, and we've got a nice little hourly fair value gap forming here. So again, if this just becomes small, rolls over, comes back down into it, touches the high of the BISI, let's say that stays where it is, the high of the BISI, consequent encroachment of the BISI, and leaves and does not even come back to this, that'd be ideal to see that keep coming higher. But run back into filling this fair value gap here, this SIBI, which means the American dollar should roll over here. We should see this roll down. Now that we've come back and filled that fair value gap, you want to see that roll over, come back down and through this mean threshold of this candle. If it comes back just to tap it and fill and run higher, you'll see this just run up to here, roll over, and come back down again. So they're all lining up with each other. This is pretty much this. This is the daily. So that would be how many hours you got left to complete that if we come back and run into here. Aussie dollar's really choppy. You've come back, found support at this old high here. If we get a reaction and take out this high, look for support to continue going higher. That would have to be a more weakness on the American dollar. Euro, same situation right now. We've got above this high. Come back and tap this and then go higher. Look for Wednesday's low or Wednesday retapping this, and then Thursday or continuation on the upside. If this reverses today, comes back and taps it, you want to see that accelerate above and start digging into that candle. If we just keep running today, it could just run all the way straight up into here, and you never got an opportunity to get in on that. We've closed above here. You got a couple more highs to go to, and the edge of this SIBI is just being hit now. So you still have tomorrow and then continuation. This was today, tomorrow, come back into it, and then continue on the upside. So today maybe just a small range day for these candles. Unless they explode to the upside right now, I'd expect to see those hold and come back and find tomorrow, come back and tap that low of this candle. Or a little Canadian dollar, just when you thought it was a little engine that could, it can't. Trades below, comes back into it. So we're looking for continuation on the downside. I want to see what I want to see, and what's appearing is a different story. So we're getting a 50% of this run here. error right there right now. Let's just pop into this fair value gap here, fill that in, leave this one open, and then start going higher. Because we're just coming into that 50% of it now. We've traded below this level on a close. Now if we come back, find support this, you expect to see this roll over again. That would insinuate that the American dollar would have some strength here to push this down, so that the American dollar just starts to turn and go back higher, and the British pound would start coming back down, closing off in here today. Yeah, I want to see if this just holds, becomes a small candle today. Silver sitting flat. Let's go back here. Wait for this open. How are you guys doing this morning? Morning, Chris. CPI hit the liquidity that ICT was looking for. Morning, Russell. Quick Solutions, good morning. Push the like button, please. Thank you, Hadid. Thank you, sir. Thank you, thank you. So, what have we got in store for us today? We're coming back and tapping them. We've closed above. That's what we wanted to see. We didn't get a fair value gap close above, but that's the 830 tapper. I want to see this tap down here though. Yeah, that puts us right on that little. We'll see where this sits for the next 20 minutes. If this is a small candle, then our graded response is what we're looking for. So just keep your eyes on the 3 levels inside here, or your 4 levels. If you put your quads in here, keep in mind these old highs and the open close. Keep your eyes on those. $9.72. Yeah, anywhere here is good for me. I'd like to see it tap the 964 though. $9.72. You're just looking for the open close over here. I like it. Hourly, then rip higher. Yes, to 250. Well, you want to get up in here. Ambitious. I like it. I like it, a D. Let's make it happen. So that one's tapping those highs right now. That's perfectly legitimate. Tap it and go. Or it tap. Now you want to see it leave. If you're one of those aggressive bulls and you want to be there to see that leave with some intentions now, you want to see this get some legs and accelerate out of here at 9:30's open. So you want to see it just boom, go. And there's your entrance right there. But right now, for me, there hasn't been a... okay, here's the... oh, my phone, what was that alarm signal? Right there, Hadi, 70, 73. So if that's the tap right there, I want to see it close above this high, close above here, take that high, then start going higher. So for confirmation here, so we're just one tick off there, Hadi. I think whatever the highs are here. One, and they were two. So let's see if we can get above here. That's not what you want to see. A wick, and then change in direction. Just wicked up, cleaned out some liquidity here. Morning, Shepard. Peter, good morning. There you go. Let you open and closed on it. That's your decide whether you're going to go along on that. Stop loss will sit down here. Rejection block, move to break even. Now that's still gonna come potentially down into here. So I don't want to see, let's see this order block get closed above. Now I have to go here because this turns into a bear. We haven't got a body above here yet, so I want to see that close above there. Next 12 seconds or so. Rejection block, pay yourself a portion there. So let's just follow the rules here. Let's just do one here. And sell ourselves one there. You make some money. And now let's see if 50% of this wick gets let go. I expect to see that going to come back and tap me here. There you go. That's the open. We'll buy one there. Now let's see if this would be just below the 830 open here. I don't see that continue going higher now. If it takes out that high, I'll go to break even and then let it run. It's 50%. You'd pay yourself there. I'm going to go to break even there. If this has got intentions of driving higher, faster, you want to see this just start going from here. Yes, baby. That's the way you do it. Money for nothing and your money's for free. There's the highs. Pay yourself at the high. I've only got one on, so we're just going to let that ride. You missed it, Russell. That's all right, buddy. Another one's coming. Just wait for the wait for a run above here, and use this, if you can use this candle's high to go higher. So it's a stress-free trade now. And whether or not you stress over how much you could potentially lose, or just that, hey, look, man, I'm up 35 bucks. That's enough for an entree at Denny's. So fair value gap, just traded below it. You want to see that keep going higher now. I don't want to see this thing filling in on the way down. Come back to the mean threshold of that candle right there and use it for support to go higher. And that's sitting right at, I don't know what that is. There's 50% right there. If you're using quarters. We're below the 50. But 50% of this, did we hit right here? We did. 50% of that BISI, you hit it, and you want to see it leave, which is exactly what it's doing. Lovely, lovely. Now you don't want to see it mucking around in here. Just let's go. Get some legs. Get out of there. Yes, that's what I'm going to try to do today, Hadi, is practice staying in. Go for your objective. Once you're at that break-even point, now we want to see it clear that high. You can move to your comfortable break-even and just let it run. And if you miss, if it turns back and you say, I just missed $700-800 there, then you just go, okay, I missed it. Tomorrow we'll try it again. And then just start analyzing what you were thinking. The psychology is the stuff you want to screen capture and capture today. Now you've taken that high. You want to see it leave with intention, right? And start screen capture. This is at this level. I was feeling like this reversal here was a great opportunity. So I'm looking for at minimum a take profit model 3 on this. If you're looking at a take profit model 4, I'm looking for a 4 banger today. A 4 banger will put you right up in here at 214. So if that's my upside objective for a 4 banger, if you're looking for just a 2 or 2.5, you're looking for 118 or 142. So I'll put those on there as well. Those are typical safe places to expect price to go to. So you got these 3 levels here. We may create a 5-minute fair value gap below price here and entrance inside, maybe an opportunity to get in a new position. Love it. There we go. Got in on that 1-minute fair value gap, targeted wick highs at hurdles, partial here. 12 handles. So I want to see this stay open. So now typically I would start to march my freaking stop loss up into here. And protect my money like that. Now I want to see this order block, hold price. You can come back in, tap the highs. You can tap the open, and that's it. You don't want to come back into the mean threshold of these candles. Line in the sand for me is that little villa right there. But a little tippy tappy of the highs here. And you're constantly watching for a new fair value gap to form. And then it could reverse on you and take out your trade. But then you'll see lots of those occurring on a 1 minute chart where you just say, look, once I'm in now, I'm looking at my 1 hour chart, and that's my objective right there. So forget all this. Just look for your 1 hour chart, which is right here. That 4 banger that we're looking for is the daily volume imbalance, or the daily inversion right here at 220. So it's just above that 4 banger. So that'd be a good place to aim for. So you ignore the rest of this. Keep your stop loss. Now that you're in profit, leave it alone. If it comes back and takes you out and retaps this high and then leaves, you'd be like, dang, why didn't I just leave my stop loss at just above break even? But you don't want to see that level get taken, you see, because then we start getting a little structure break, a little fair value gap change. And now we start potentially running back into this range here. And then you would have denied yourself a little bit of profit. So I've only got 1 on there, so it looks like it's going to come back and get me. That's already eaten right through that candle's wick, mean threshold, and we see how it's popped through here already. So I expect that it's going to take a run on me now. Is that back to 50% of that? I'm trying to keep an eye on that wick there. %50 of the wick. Come back inside it. Now I don't want to see this one get taken. If my stop loss is sitting here, that should be safe if we don't revisit this level again. Oh, there's a small little tiny imbalance. Do you see that, guys? See that one sitting right there? We traded below it already. It's good to get up through it, not just tap it. Don't come back down. I don't want to see that come back down. So I don't want to see that opening get taken again. Otherwise, I'm on the wrong side of that. See how we're just tapping it? It rolls over here now and takes out that low. We're looking for a deeper run here. There's nothing else in here. I'm out. Now for me, it's got to get back above here to get back in sync with it again. On a 5 minute chart, we've got that little imbalance down here. We've run above that high. We have not run above the high. We're just still sitting on it right here. Back to that candle's open again. This is where I get thrown off. So if this ends up going higher here, that just take your profit, just move to break even and leave it. And stop staring at all these little opportunities. You say, I think it's going to reverse, come back down. That's the trouble with micro trading versus macro trading. If you're a micro trader like I've been for a while now, it's hard to throw yourself back into a macro idea when you see it turning on the lower time frames, and you go, that's not quite going to make it there yet. It's got a bunch of work down here, and I'm already up $1,000. Am I going to give that away? Right? So the argument is over when you start looking at how much money you're making over here versus how much you're willing to let it come back to go higher. And you got to take your eyes either off of that and change your perspective, or you look at that for micro profits. And we're still in that opening range, right? And so far, that little level right there is still holding. ITGC says they're chasing his stop loss. Good morning, moving your. Good morning, moving your stop out. Time suggests we may come back down a bit before going higher. Next bus is coming. Yeah, you're out too, Hadi. Yeah, I like that Derek's idea. I want to see it come back down one more time so that we can catch this bus long again. So Derek, make it happen. So if we get back at that 5-minute one down in here, we just come back and retap that. I'd be okay with that. Leave this one open. That puts us right back into where, oh yeah, that puts us below here. Taps this old high again and sends it higher. Look at the range we're in right now and say, could we hit 50% of this? Get rid of this one. 50% puts us right on that little guy right there. Right in the middle of that BISI. Look at that, Hadi. We nailed it right. Time suggests we come back down. Next bus agreed. Derek 100%. I really like order blocks. I also like equilibrium where loss equals breaker. Bullish. Yes. We come back into here, Derek. I like it. Mitigation. I guess this will be a swing below that low. That'd be a breaker there. Come back into this breaker and this breaker overlap. I like it. Old low, old highs here. Just give us a little roll over here, right back into this regular first presentation fair value gap inside the breaker and push higher. Is that where you're looking at here, Derek? Right here and this first presentation? $10 reverse. Well, let's see where we close above here now. Got to be careful. It's the macro beginning now. The macro is beginning now. So we have a reverse here and reverse here. And a new high taken here. Same rinse and repeat, the same thing we did before. Want to see a fair value gap? Yep. Did I miss it? Did you guys get in on it? Didn't quite tap the high. So Hadi, this is a good lesson for us. If you left it alone, our entry where we had it right here, just moved to break even. If you just left it alone, you'd still be in this. This is the kind of thing you got to overcome, right? Because this, if it takes this, you got to look at this and say, I hope this is a bear trap, so that we come all the way down here, but we do not break that low. If we break that low, then I'm on the wrong side of it. And we wanted to see it come here one more time, and it gave you the bear trap and then left. So that's how I'm going to kind of screen capture that and write that today, saying, if you want to go long and you want to stay in it longer, anticipate you got to trade for the bear trap, not just the reversal. And you got to hope the bear trap, if it trades below that level, that's where you got to put your stop loss down here to say, if it trades below that on a close, then I'm on the wrong side of it. Then I can get out, not just look for the first take profit model 3 reversal right there, which is good. We made a bit of profit. But now you think about that was $1,000 there. So you'd be up 1,500 right there. Have we stayed in? So that's bouncing off of that 107 level. Now, do we get a run down in here? A retest of this old high here. Fair value, yeah. For the 15-minute? Oh, yes. You see the problem there, Derek, though, on the 15-minute chart is we open and closed right on the high. You give just a little tap down and away you go. I have another theory. About, and Michael's never mentioned this, but I just noticed this yesterday, and I kind of I took a trade off of the theory. It kind of panned out, but it's not maybe if I just put it out to all you guys, you can think about the idea. This is what I got. If we have a break above a high, okay, and we have a candle that forms from its, when this big candle here forms like that, you go, oh, where could we come back to if you take the next candle's open to the wick low? Look where this lines up. So as soon as that candle opens, you could expect that if you're coming back into this candle, 50% on that candle. Look at that right there, 50%. And then you want to say that would form the fair value gap below you. So if you have this, you say, I want to see a fair value gap forming on this candle. When that opens, take the open and go down to the wick high here. Look at 50% of the run, and that should be the beginning of your fair value gap. And then you could take 50% of that from there to there and look where it ends up. The next candle comes into consequent encroachment, and then we go higher. Just an idea I had, just mucking around with it. You guys tell me what you think. Got to play with some ideas, right? There's that 2.5. See, Hadi, we'd be just like cleaning house right now. We'd be like dancing around the house. He's looking for a desperate chance for a retracement here. Well, you could see a bounce off of here, Derek, on the 5-minute chart, roll over and come back. So now we've got this trade close above here now, right? Now what you want to see is a retracement back into here and 50% of this. So if you're looking at 50% of that, you could see a retap to 50% right there. That would put us right back. So if we were to 50 and just closed into the discount range there, it hits this old high, which happens to be this high right here. You want to see that go higher. So that will get you to your just under 2.5, roll over and come back down. I don't see, is that little reversal right there? Yeah, there's a little tiny one right there. Now you want to see that come down? Start coming lower. Come on down. Come on down. No, no, don't go back up. Mean threshold. Where are you going to close then? Oh, you're going higher. All right. What's the high of this candle? Did I get that wrong and that did not close below there? The high in that candle is 121.50 and the close on this candle is 121. So it did not close below that low. Oh, it did. 121, 121.50. So it did. So now I'd expect to see that roll come up here, tap, tap, go lower. Right into the rejection block. So we'll see if it comes lower. Here's your 10 o'clock now. Let's get a bigger body through here. Oh yeah. We still haven't quite finished this 4-hour and we haven't hit the daily yet. So we're above that level now. Closed above it. We're inside it again, and now we're going higher. That's what you got to write, screen capture that to D, write that little market right there. Put your text in here, highlight the area that we're looking at for change in direction. Catching a sweet entry right here, perfect entry, and leaving it for our objectives and not getting influenced by no bear, looking for the bear trap. And the bear trap fires off and then takes it higher. So looking at the from price leg perspective. Here's another way to look at that for your first price leg, and then your second price leg puts us right here, just shy of that 4 hour again, so 154. That's a good one for both of us, Adi. That's how I'm going to kind of put that in my book. There's the 2.5. Price legs completed at 153. Well, from our entrance here, Hadi, that would have been, if we go to 250, that'll be 230 handles we would have had for that. Right now, we'd be up 130 handles. There's the 250 or 153. That price leg's now done. So oh, I was hoping to do that on a different screen. Okay. I'll have to do that later then. I'll screen capture that later then, I guess. I was going to put that now on a separate screen here and just do a screen capture and make some notes. So looking for a 4-banger up here now. Do you feel the pain of this right now, Hadi? Do you feel the pain of a perfect entry? And getting thrown off in the bear trap. Oh man, we'll get it one day, buddy. We'll get it. That's 150 handles, man. That's a couple of grand right there. It was about $1,000 right there. So that next price leg, that would have put another 1,500. So you got $3,000 right now. All right. So 4-banger time. We're looking for this daily open. It doesn't look like you're going to give us an opportunity, Derek, to get back in that one. Yeah, you don't want to chase price now. Did anybody else stay in that trade from earlier and didn't move their stop loss like you're supposed to do? Did anybody else take that entry right there off that? Nice little body above, come back, find support at that. Cam Model 1, consolidation, displacement. Cam Model 1 entry for a continuation. Don't do it, Russell. Where's the clone of yours? You need some of that. Yeah, you could chase price and make it there. The part you have to ask yourself though is, even if you won that, let's say you chased that right now and it went straight to that level, are you rewarding good trading habits, or are you just saying, yeah, and you're going to celebrate this? All you're going to do is mentally reinforce the gambling that's going to go higher. And right now you'd be like, no, it's just typical trading back against you, right? Because you're chasing price. And now you've got a potential reversal situation here. Look for a large part of the range, 50%, order block, little swing. Use this guy here to come lower, aim for this guy. So watch here. Because all you're going to do is just reinforce gambling with that dopamine hit. And that's not what you want to reinforce. You want to reinforce good trading habits, not chasing and getting a luxury reward. That's just a rush. That's the thrill of jumping off the cliff and the chute opening just in time. So now we've traded below that. I want to see if this trades back inside here. Anywhere inside there is fine. Roll over and come back down again. Just traded below it, into it, come lower. Those of you who wanted to chase that right as we were discussing it are just killing yourself, kicking yourself now, because you know you're hoping this is going to trade back through this level right here. Sorry, that one right there. That's 168. It's got to close above that. See how it's just come back in and filling? A little tiny guy here. Pop through it. You want to see that close there in the next 9 seconds above here now. Not just tap the mean threshold here and come back through. There, it's above it. Below it, above it. Wait for structure break. Now you're like, I knew I should have taken it, right? Hindsight 2020. Came back into the rejection block, did not take the high. You traded it back above it, come back inside it, find support, push higher, take the high, and go higher. And if it trades back below it again, you can see how these just two candles are going back and forth. Can throw you off if you're just an inversion trader. And I suppose if you include this in this with this, you haven't traded below it yet. You have to include all of this in here. This one and that one. So we're just back to the consequent encroachment, trade above it, into it, take the high, look for higher. Abundance mindset, I like it, Ollie. Just a sim trade, but I got it to close to a SR flip. I have on the daily. Share it on Telegram. S and R flip. What's that? What's an S and R flip? Nice work, Peter. Okay, there's the four banger right there. Done and dusted. Looking at hourly chart time, we have volume and bounce around 289. Oh, you've got this whole freaking thing in here. I think I had to box in everything in there because there's so many different levels that you could aim for in that. That's why I put it on the one giant box there. There's multiple levels in here. But there's a four banger hit. So indeed, that would have been a nice little run. 230 handles. Or 200 handles. What was the entrance right here? 220 or 020 to 18. Just under 200 handles. I would have been okay with that. I would have been quite happy with that run for the day. I missed VWAP bounce. The VWAP. Good old VWAP bounces, man. You could trade anything this morning as long as you were going along. Every setup seems like a winner. So now let's take the next opportunity. If we were going to say, if we're going to keep running higher, where's our next? If you're trading on a take profit model 4, then this is what you're doing with the take profit model 4. You're doing this. You're going partial at 2, partial at 3, partial at 4, and then you have to keep going to 5 and 6. Stand by. Let me see if I got another one in here. Bullish. Do I have 6, 5, and 6? Yep. So here's 5 right here. So just move it. So basically you're taking partials at every new standard deviation. So 4, 5, 6. You could do it in 2.5 increments or in 0.5 increments as well. So there's 5, 5.5. So once you get over 4, pay yourself, or just move your stop loss to the previous one behind. If it gets to 4.5, move it to 4. If it gets to 5, move it to 4.5. Gets to 5.5, move it to 5. If you've only got one small piece left on there, just keep trailing your stop loss 1/2 handle above or below, I should say. That's how the take profit model forward work. And Hadi, you were saying that next one above you is 280 something? 289.25. That's 286 is 5.5 right there. So that's pretty close to your objective. That's right. All you guys who are along right now are so going to get your ass handed to you. It's coming, man. It's just going to rip right back and tear your ass apart. Those of you who are leaving your stop losses down here, it's going to come back and rip right through you. So here's your question is now is we know how we're going to type this or put this in our journals, Hadi. The next question is, what if we did hold that and it took off on us? Where would the influence be to take us out of our trade? Would it be this 4 hour? Would that be this open? Would it be the swing projection? Would it be what would hold us back from taking a higher run? What will we do now? If this was a straight run, we'd still be in this because we know why we went out of it there. So that'll be our need to correct that tomorrow. And you guys can hold us accountable to that tomorrow. If you see me moving that stop loss, just give me the veritable slap on the hand and say, wait. As soon as you go to break even, leave it alone. And then where do we manage it in here? Do we manage it below each order block? Stay below here, stay below here, stay below the order block. You only want to see it trade below, because anytime you see it trade below the order block, then we say to ourselves, okay, if it trades below that, then that's our bear trap that did not fire off, right? So if we see it trade below here, so you'd have to literally sit right down here and wait, even though you've just seen this right here, trade below it, come back, tap it, and we keep coming lower. You're saying, oh, I want to get out of that right there, right? Or do we wait now? You got to wait inside here. So here's going to be $1,000 you're going to give back here to decide whether or not we start to eat through this one, eat through this one, eat through this one. How many of those on us micro traders are we going to eat through before we break market structure to the downside? The market structure shift may be our new go, no go line, if that makes any sense, instead of this. Because you see how that one didn't work? This one does. This one does. We did not trade below it because we have to incorporate the whole thing. We did not trade below it. Did not, has. So if this is the first place where you start to get out of that trade, using a take profit model 3 model. Watch here. That took us out using a take profit model 3. But had that not happened, then we'd be up here right now. And we'd be sitting just below here. Because you'd be like, as soon as it takes that out, there, taps it, I'm out. I'm going to move to the sidelines. Now, if it trades back through that, you can get back in sync with it again and continue going higher. So keep your eyes on that level right there. You've traded back into it. Now you've maximized your profits. You're out. Now you're looking for this to go short. This is the bat from hell that days that ICT talks about when price keeps going, running in the direction. I remember him saying there are 4 to 6 days of this in a month. Is that one of his newest comments? I've never heard that comment before. All I know how to do is buy Disney and buy crude oil. Well, whatever you're using in Disney and crude oil, can't you use it here? Is it not a fractal theory that you use throughout any indice, any markets? If it's a solid algorithmic approach, then it should work on all time frames, all asset classes. It shouldn't just work on Disney. So unless you're using a fundamental approach on Disney, see how that level's holding right now? I expect to see it come back lower now. Perhaps, Adi, if we look at it like this, if we see this first one forming, we look for the, if we have not hit our upside objective on the hourly chart, then we wait for at least the first objective. So you got to break even and just wait and see if it works. And if you can get back in sync with it, which we still couldn't get back in sync with it, we needed that to come down just a tad bit more to get us in there. It didn't give it to us. You got another fair value gap here. You traded above it, came right back into it. We could have got long there. Could have got long there. Now that I look at it, yeah, we could have got long there. It's just coming back. The mean threshold, the consequent encroachment of that. The wick came down, filled it. Body stayed above consequent encroachment, and we kept going higher. This candle's wick, we trade back into half of it. Go higher. Now we're back above that level on a close. We're above the mean threshold of that candle. Now, this would be a tap here. And I want to see a range extension. I want to see it tap here. And I'm only going to go on a 1 there, looking for higher prices. And stop loss will go down here because I don't want to see it break market structure to the downside again, because it would have to take that out. So if we can get back into here, I'll put 1 long right on there. And the stop loss will sit right down in here. Or 50% of this range. No, I'm going to stick with that. A wick could come down to 50% of that range. So I'm just going to pre-setup where I think this could mess with my head here. It's a 27 candle, so we have a potential reversal. There, trip me in. Now I want to see it accelerate out of here. It's a 27 candle, so chances are this could be the bottom of the hour, reverse and come back down lower. And we're buying it right at above a premium inside the small range. So if this ends up being a bull trap, it'll go down and take out that low. So I'm going to make sure I'm back in sync with the market again. So there's the tap at the bottom of it. It's this inversion right here. And we've traded above that BISI, and we've also created another little SIBI here that we've traded above them both. Come back inside them, tap them. Now you want to see it accelerate out of here and not roll over. And it's the bottom of the hour though. So Crazy Ivan, look back, enough to throw me off. That's where all those other little ideas start coming into. But just a raw continuation, that's what I'd see right there for continuation to the upside. Now, if it trades back, see it went through it, and now it's through it again, I want to see that push higher. And if it takes that high there, then I'll move this thing right into break even. Just taking this high. So you're understanding my logic. Here would be the bear trap or the bull trap that I got caught in, and it just takes me lower. Or this holds that little fair value gap down there and this one here, those two hold price, and we keep going higher. And the fact that it's the bottom of the hour is making me nervous, and we're not getting a kick out of there. We didn't come back, tap and leave already. You see that? So my stop loss is here. My fail-safe candle would be right here. If I close below that level on a close, come back into it, I'm running for the low. So then I'll take a small loss. So that's where my logic is, looking at these levels. Right there. That's the bottom of it. We're already wicking through it. Don't like it. I'm out. I don't even want to see it wick through. There's a little tiny imbalance there too. So if my stop loss is sitting here, watch how if it would have got taken. We're already through that level and through that level. Not good signs, right? Bottom of the hour, Crazy Ivan, come back, take me out there. Would have taken me out. So fail safe, smaller loss than the full loss right there. The bull trap. Now I want to see this level. You want to get back in sync with it now. You want to see that level close below. It did. Come back into it right there. Short. Real quick. See how we traded below it? Traded back into it real quick, and now you're going short. So that was a small test. If I wanted to see it go higher, it didn't work. The logic was, we're seeing at the bottom of the hour. We're seeing that starting to eat through this level. The fact that it didn't leave right away, those are all good things to kind of watch. Ran the lows out. Now, if this ends up being no body below here, that wick, once again, does all the damage, and it's a 30 candle. I'm expecting to see a swing point here. And if that keeps going to 30.38, we're looking for a run all the way back down into this order block down here. So watch this level once again. You find support here. It's got to get back through that level, through this level, and that level together now. 1, 2, 3, 4 levels. Close above them to go higher. So see how you're below. This comes back in here. Does it find support off that 4 level? And that 4 banger level is perfectly in the top of that. Is it a sensitive level to aim for on the way up? And is it a data point the algorithm's reaching for? You tell me. Like close, create a fair value gap, close. So there's your 1030. We're through 1. We're through 2, 3, and 4. So I want to see that close above there now. And now if it continues going higher, that unfortunately is the wick that does the damage. Didn't I get caught on that yesterday? A bunch of wicks taking me out, doing the damage. So no close above those levels. 1, 2, 3. No close, just a wick. We're back inside that little tiny imbalance there. Stretch it out. You'll see it sitting right there. We're tapping it. You want to see that go higher from here. If that is, now we've taken this low out, there's your reversal. You want to see that go higher from here. If it closes below there, I see that. I don't even like wicks getting down in there. It's starting to get choppy again. So wait. Mean threshold. So these wicks doing this real choppy crap. Watch where the body closes. You use fundamentals. Okay, I got you, Craig. It works for you. You're one of those guys that takes fundamentals and makes them work for him. I like it. So 3 out of the 4 are still showing bearishness. And this one here is the only one holding it up. You got 2 here that are holding price up. And you got 1, 2, 3 out of 5 now that are keeping it down. So see that one right there, closing right inside it, opening inside it. Get some legs, go higher if you want to get through here. Derek, you may still get your retracement. That 1130, a run on all this liquidity. Look where that takes us. %, 62%, right back in here. That's the high, and 11 o'clock creates this reversal. Like we see a displacement, but down here around 11. And then a pop back up, run back down into 50 to 62% of the range that's created in the morning from 9:30. Then expect to see a run back into here, and then wait for a reversal, catch that reversal for a run back up into this, deeper into the range of that daily imbalance there. So you just sit on that idea for a moment. Like all those people think they're, oh, we've lost an opportunity to go long. Just wait. Lunch hour, that retracement back at 11 o'clock into that range could bring you right back into our opportunity here. Patience will be rewarded. Broke above it. All three of them closed above them. Tap this. You want to see it go higher. You don't want to see it. The fact, see how it's just wicking in here. As soon as it does that, you think, no, it's still mucking around. Nothing clean. If it had its intentions, it'll tap it and accelerate this whole waffling back and forth. We're getting in high resistance stuff. We're stuck inside these fair value gaps now. How's your Disney doing now, Derek? Or Craig? Nice. 112 I was looking for. Look at that. You're so close. 112.22. Looking for 112.38. I'd love to know on a sidebar what you think about your fundamental analysis on these things are, because it works for you. It works for you, so I'm always kind of keen to learn something new. Our DAX. Keep on coming, folks. Keep on coming. Banks are good. Oh, yeah. Keep going. Oh, yeah. 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 Keep coming. This is the one we wanted to see in London or in British pound. Come back, tap this old high, and then start leaving to go higher. We wanted to see a small fair value gap forming here. Then this candle come back and tap that. But if that one does, that's fine. This one's got to accelerate and leave that open and go higher. US dollar hit the high, and you want to see it roll over and come back down into here. That'll give this guy a chance to get up a little higher. My goodness. All these giveaways. Giveaway, giveaway. Look at that swing. We were looking for that level, and it just cut right back against this here. Returned back to this old order block high. And now getting a reaction off of it. Still might get this level here yet. It looks like it wants to get there. We haven't got a close below here yet. 18 minutes. So see where that candle ends. If it closes below this level right here, then sloppy. You can see a run back into here. These are a couple of little imbalances, so I'd want to highlight this area right here. See where that closes in 18 minutes. Closes below that, look for a run back into here. Closes above that, look for some support inside here. You want to see it close above this level right here, and then use that to march higher. So I want to see close back through that preferably to get here. If not, then we could get another revisit down here. UNG, not doing what we wanted it to do. We wanted to see it go higher. Yeah, we got above that level. I only wanted to see mean threshold of this candle get tapped and then go higher. Yeah, I don't like this. I don't like this. Gold. Back inside this candle's mean threshold. I like this for higher. I like us to get back up inside this 325 right here. I like to see it hit that. Crude oil, nice reversal. Trades below, market structure shift. Trade back up inside it and inside this breaker inside a fair value gap. Catch it, run. Nice. If you're trading oil, right there, Craig, really nice market structure shift. Here, displacement, breaker, fair value gap, breaker inside a fair value gap. Winner, winner, chicken dinner. Ding, ding, ding. Catch it for a run. Take out the low, pay yourself. Move to break even, pay yourself. Look for a run deeper into that range. Old high here. Look for 50%, 62%. Take profit model. So here, pay yourself. Pay yourself, move to 50. Hit 72, move to 62. So if it would have gone doop like that, run down, tap this, finished here, you're still good. Your stop loss is sitting here, and you're in profits from that entrance level here using the take profit model 1. If you hit 70%, you're at 62 right now. You pay yourself here. So now you want to see that drop down to 75, move to 70, 78, move to 75. If it gets to 88, start chasing it. And look for that little box down here. So right now we're going to pretend our stop loss is sitting right there at 62. See if it comes back and taps you, takes you out after paying yourself at 70. And if that's the optimum trade entry reversal, right off this old high, and then starts going higher, you would have maxed your profit inside that small range. That's using the take profit models. We haven't predicted anything more for these guys, have we? Other than that, for upside, this for downside. Corn has finally hit our downside objective again now. Nice. Nice, nice. Okay. We've got this reversal here. We've tapped it the last hour, and we're going higher. Sweet. You gotta love the taste of coffee. That's a beautiful entry right there. Continuation, pay yourself at rejection block, and wait for that high to get taken. If you close above that, look for that candle and this imbalance right here to continue pushing higher for coffee. So far, so good. It's looking good, you guys. Some markets are looking better. They're looking much better. Trade below, come back inside, did not close above. So we're just waiting for that 11 o'clock to just give us a little pound down now. If you're just patient enough to wait through this big long run up to this retracement at 11 to 11:30 on that run that we just had, and then capture it again for another long for lunch hour, we could see this a big trade back into here. So this is our little magic window. Let's put this as a the magic window. Ding, 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 ding. Here comes the next macro. Right there. So consolidation, drop below it. Cam model 2 right there. Retest, you want to see that hold. Roll over and come down. And this is not a clean trade setup either. It's sloppy. So those of you who are going short on it, ask yourself, am I getting a clean setup here? Oh, Sandra, you got the big divorce, did you? You got the big divorce, and he got the house. You got everything. Yeah, marrying a trade, you got to have. That's why when you got to look at the fail safe as your prenup. Okay, that's what you got to look. If you're marrying your trade, at least have a prenup, and your prenup is your fail safe. That's how I look at the fail safe from a marriage perspective. Have that prenup in place on your trade in case you're on the wrong side of it. Those of you who are going to go short on that, you can see right now you're already being squeezed, and if you had your stop loss sitting above these highs, it just ran you. And now we're back above that level again, finding support. That's why it's not clean. It's choppy as hell here. And this window shifts just slightly if we take this high. If we make it back to the 5th level, then you got to pull your fib tool all the way up there. But this could be another monster leg. This could be a huge monster leg higher. So let's just do this. Let's do some reverse engineering here. I'm just playing. Not that you actually need to do this. I'm just playing. I have no idea. That's the bottom of the weekly. If my gray box is right, that's a weekly candle. The bottom of the magic window, look where it puts us. Right on the money for that next price leg higher. I'm not saying it's going to go there, but when I see like perfect levels lining up, I go, Interesting to have an interesting data point here at a 62% retracement for the next leg higher. Does that coincide with a nice data point at 350? Yeah, hells it does. Draw it out on your charts and see if I'm wrong. That high has to hold though. See how this is finding support now? But how many times did it trade above and you thought, okay, now I want to see it leave? Like right there, come back, tab it. I want to see it leave. Nope. Okay, now I want to see it leave. Nope. Nope. Then it comes back through here. And now we've extended higher. So forget that whole idea. Unless this is the next price leg and say so long, suckers. We're going up here at 458. Wait for a body to get above here. It does. Come back, find some support here. That's a long. Your stop loss has to go below here. And it's late. It's late, it's 11 o'clock. So if this 11 o'clock does not take out this low, my theory is, and I'm not sure if Michael's mentioned this, I'm almost feel like he has, and Derek, you'll have to correct me if I'm wrong. If it does not make that run at 11:30 and continues to run higher all the way through to lunch, that means it's just bullish all day long. Like it's just going to run for the rest of the day. Like you're not going to get a retracement, then she's off and running. So for me, that have to have a structure breakdown here. So forget the reverse here, reverse here. I'm going with the lesson I was trying to take here. I'm trying to use here, but I also have time, 11 o'clock, and 12 o'clock as potential reversal back into the magic window. If that happens, then it will have to take out the slow here. If this continues to hold, I'm going to see price go higher. It's macro time, so it's a good opportunity to see off macro time to go higher. Now this candle here, I want to see that whole price. It's just taking out this high here, so technically I should move to break even, but I want to see if this order block holds price now. Like if I was chasing this on a micro level, I'd be like right up there and say I don't want to take any losses on this. Just because of time and price, it could go wrong, but I'm just practicing here on can I hold this for another price leg higher. I want to see it eating through this. Allow for institutional order flow entry trail. 50% of this. Now we've traded above this. There's a fair value gap sitting here. I like that opportunity. See if we can, I want the A plus set up is just to leave here and not the A, the B, and the C. Does that make sense? So graded response right here off of here. Accelerate. And it's been down here once, so I'm not going to take a loss there. Stop dicking around. We said we weren't going to move it. I'm not moving it. See, I've got that urge to say I don't like the way it's acting already. So I want to move my stop loss to there. My instincts are telling me to go here, and I'm probably going to get taken out. But just know that my instincts were I wanted to protect that money first before it disappears. It's not acting the way I want it to act. So I want to take that off, but I want to practice, and it's just demo. I want to practice holding that now. So we'll see if that holds. I'm going to leave that damn stop loss alone. Yes, I agree. I just don't even like the way it's acting right now. I'm just trying to go with the model and the setup inside the structure. I'm just trying to stick with the setup here. If it clears out this 5 here, if it hits the 5 level, then I'll move to break even. And then let's see if it runs. Oops. I'm allowing it to come back to this breaker here. That's 50% or more. So my failsafe is sitting just below here. It's just sitting fat there. I'm not liking it. I'm out. Not liking it. I jigging up now. It'll go higher. It's just not acting the way I want it to act. So we'll see if it goes higher. Just annoying me now. Let's see if it hits that 262. So this one's another repeat. A D, see that rinse and repeat right here, where we would have got caught here if you're using this as the stop loss. See how now we've traded back up above it again? So that reversal, this reversal, we did not take out that low, did not take out this low. So you'd have to really give that one some more legs to grow if you want to see that support. So here's where you would have talked yourself out of it, just sticking with the whole, instead of the first fair value gap reversal, the take profit model 3, change it to a take profit model 5, which would be market structure shift. And make take profit market 5 or maker 5 would be after you catch these big runs, your stop loss will sit below market structure. So that'll be a TPM model 5. I'm going to feel good that I got out of this. Oh my goodness. Wait for structure shift. First break here. Second, premium discount. Look for those two levels inside this small range. Then you're looking for the 11 o'clock. Just took out that high. My window just gets a little bit bigger. I'm with you, Hadi. I want to see that roll over here now, start coming back down. Yeah, if we can get a drive through here, like a displacement through, come back for a cam model 1 entry. This would be a cam 3 if it comes back up into 50% of this leg. But right here, line up all your cam models right now. Cam 1's here. Cam 2's 216. Cam 3 is 223. That's if we get below here, by the way, with the displacement candle. So you want to see something specific for those three models to set themselves up. Oh, that puts us right in my magic window. Huh? Uh-huh. Hmm. $8.30. Ooh, I can see key levels down here. Look at your 4-hour chart. And look how these levels, this magic window here, and these 8:30 opens, look how they become important levels on a 4-hour chart. Like if this is the high of the day, and you see the next 4 hours go lower. Derek's joke about taking out all those longs is quite possibly a reality if we see this structure break with a displacement. Okay, Craig, enjoy your day, man. We had our first barbecue yesterday. It was good. It's nothing like Lambo's kind of barbecues. I just put 2 patties on the barbecue and cooked them up. He puts like a whole buffet on his barbecue. Fortunately, I'll be working at the pro shop this afternoon and so won't be tempted to trade. Probably a good idea, Derek. I'm still going to hold to my theory that if this does not retrace at 11 o'clock to 11:30, that it's an up day all day today. That's my theory anyway. So far we've come back, filled this fair value gap, touched these old highs, and we're going higher. Just remember I said, oh, I'm not going to move my stop loss, but then chickened out. Here's another example of micro trading mentality, not allowing myself the next opportunity. There's that level. Could have moved to break even then. Again, it's a psychological thing trying to overcome now after micro trading so much, trying to allow this opportunity to keep growing. We shall see. We shall see. I'd have a glass of water. Sorry if I keep clearing my throat, but I'm not allowed to have water on my computer anymore. I'm not allowed to balance big glasses of water on my computer anymore for some reason. Come on, give us a shot down here now. What else we got out here? What's oil up to? Delicious. There's that 62%, right? So it hit 70, would have taken us out right there. This is the only part you would have missed on that run from here. When we talked about here, remember we said we're imagining putting our stop loss at 62% now after we're paying ourselves at 70. So really you lost from 75, 79% retracement. And then you got a reversal right here. Body trades above it. You come back into it for a long right there. You get one more opportunity. Bodies traded above this level as well. Bodies trade above that high. Come back into the order block. So one setup, two setups for continuation to premium box up here now. You're looking for this price to get into here. So you would have caught from low or high to 70%. Wait for your reversal. You see a reversal, you go, ooh, if we can get a market structure shift with this, be great. So if you're a gambling kind of man or person, hit your fair value gap for long, or wait for market structure shift because you don't want to be caught in a bull trap. It closes above. You go, now that triggers me for my safer entry off this order block. And now you're catching this run up higher. So as soon as you get to this kind of situation, and you're saying to yourself now, get over there. As soon as I hit 50%, I'm going to take half my trade off. Move my stop loss to break even. 62% will put us right in the box. Move my stop loss to 50. So on and so forth. See what I'm saying? So you would have paid yourself on the way down, pay yourself on the way back up again. And if you get through this box on a close, look for rejection block, look for half the wick, and then the high. And always keep your eyes on these little areas here, so you don't want to see a market structure shift get back down below this level. If you're pulling from the first one right here, if you're entered in off of this one right here, and you want to get to 50, you put yourself at 50, pay yourself there, move yourself to break even, 62%, move to 50. Now you're sitting at 70%, move to 62, it would have tapped you out in here. It was 75% would have tapped you out. But you've run down there. That's just using the take profit model 3 or 1 model. Okay, so take profit model 1 from here to here, you would have paid yourself. Take profit model from here to here, you would have paid yourself in here. If you're just going for the next take profit model 2, which is breaker to breaker, you're still waiting for that to get hit. Or sorry, box to box trading. If you're watching, Gary, there's more upside, buddy. All my ETFs are doing well. I think these all pay over 2 digits, 10% higher or higher. For this is a 20% dividend, and these are like 10 to 13% dividends. And this real estate one now, I don't know if they've stopped paying a dividend for a while, but if we get back above this level, that might be worth a run. There we go. Continuation. So you're above the 5 now. So if you're doing your take profit model 4, which is you're just using your standard deviations, and you're staying 1 standard deviation below. So if you've hit 4, you pay yourself at 4. You hit 5, move to 4. And then from 5 on, or 4 on, or 6 on, whatever you want, or just each standard deviation, move to the previous standard deviation and look for a reversal, look for market structure shifts, so on and so forth, to see if they're going to come back and get you before it gets you. So that failsafe is using structure as your failsafe to determine whether or not it's going to come back one more standard deviation and take you out. So in other words, if you see in the next standard deviation a break on market structure and you're sitting down here, you might want to use that as your example, your reason to close out your trade, other than your one whole deviation. Is that a 4-hour I've got sitting right here? No, it's a weekly. So that weekly level. I'd love to see us hammer back here, tap this, let it close there, come back, hammer this one on a 4-hour, and then start driving higher. That would really throw people off. If the next 4 hours it comes back into here. But this is the kind of thing I'd be looking for. So wherever this next 4-hour candle opens, you take your fib tool from the top of this candle to the open and look for 50% retracement back inside that candle. Now that we've taken out a bunch of upside objectives, that's what I'm going to do on a 4-hour chart to see what that looks, see if we can get an idea if there's any overlap between the next candle's open and that candle. This candle's high. This is quickly going by way of the dodo here. There's nothing in here that really floats my boat. I think we're gonna have to close the magic window. Someone throw a rock through the magic window. No, the magic window is the typically 11 o'clock. Between 11 and 11:30, you see a retracement, like Michael says, or he says between 11:30 and 1:30, you'll see a retracement, a measure of some sort of retracement back on this run that was created from the 9:30 open. And that's just the 60 to 62% or 50 to 62% magic window. And it just keeps getting adjusted based on a new high. Then I have to create, and then I have to pop it up a little higher, move the window a little higher. Like there, so we have to move it higher again. Because if it doesn't come through here, we do not get that retracement. That's why, again, my theory was we're just going to keep running for the rest of the day. Like it's just going to tear it. If we have got no retracement back at that time, then you can anticipate that we're just going to keep getting a bullish run all day long. Which is so much more painful now. You think about it, Hadi. When we entered here right on that 9:30 perfect entry, what you'd be sitting at right now, you'd be 260 handles up already. $290 right there. That's the top of the hourly fair value gap. Immediate retracement at 292. That's sitting right there on top of that hourly rebalance. Right on it now. We'll see if that climbs above that. Right there is the top of the hourly immediate rebalance on March 4th's 8 a.m. March 3rd's 8 a.m. candle. That's sitting right there. We're at the high of it. So you want to see that close above that. Come back and find support at that. Rejection blocks at 3. Rejection blocks at 300. Let's see if this holds here. Yeah, I agree with you, Hindi. The next target would be that. I just want to see if this 92 holds or not. That is 92, correct? Yep. Let's see if that level right there is just banging off that 1 hour. 1 hour one back here. You'll see it when I draw it out here. See it right there? This immediate rebalance. Treat it like a fair value gap, and we're sitting right at top of 92 right there. On here it's 90. What's that candle's close? Sorry, is open to 90.25. What am I looking at here then? This candle's close or open to 90.25. Internal range liquidity hunt. Traded below it, tapped it 50%. Ready. Run back above it, continue going higher. Retap an old breaker. Yep, I'm still looking for that window. Still looking for a short into that window. It's got to get below here for me. 25 more minutes. See the difference between when you want to see a nice tap and then leave? That's the difference between just it doing what you want it to do and all this chop. And it's slowly grinding up. Like that entry we had, off of here. Tap old highs, fair value gap, leaves a portion open. It doesn't fully fill it. Continue going higher, take out an old high, you come back to it, find support. But they're just like little tiny, not clean snap off of them and go like that kind of thing, right? And that's time and price and that reaction that you expect that time of day. And then when you start getting into this lunch hour stuff and the chopping around, our little window keeps moving higher and higher to here. You're gonna have to give up on this if it doesn't come back here before 1 o'clock. Yeah, I'd like to see it come lower first. The fact that 11 o'clock, we didn't have that reaction off 11 o'clock automatically makes me start thinking this could be just going higher for the rest of the day. Like we're anticipating this little magic window down here. But if there is no retracement after taking out 10 o'clock's high and it just keeps going higher, this is my suspicion that we're going to go higher for the rest of the day. We'll see. It may have switched over to later on in 11 o'clock. That's why I'm looking for 11:30, 11:50 macro. See if 11:50 macro starts to make a move down. And then if it doesn't, if it just keeps marching higher, then you're waiting for a 1 o'clock retracement off the weekly here. And then see if that bounces off the weekly and comes back down into the range. And by then this will be up here somewhere, taking out these lows. Yeah, if you like what we're doing, hit the like button. I'd appreciate it. It lets me know you enjoy our content. And it's not just me. These guys are making some awesome comments on the side here in the Telegram channels. They're giving you some great advice as well. So it's not just me. These guys are doing some Hadi and those guys are all helping out your charts, your understanding of price action. So you're giving them a thumbs up just as much as you're giving me one. So it's for the community. I appreciate that. We all do. And if you're new to our channel, by all means, subscribe, hit the like button, notify. We'll let you know when we're on. We're happy to help out any way we can. I'm going to try and hit that pause button more often so I don't cough your ears off. But yeah, we're happy to have you. We're up to 1,215 people, I think, right now. Our little community is growing. And I much appreciate you guys spending your time with me. I really do. I try to give you as many different assets as I can. If there's something you want me to look at, by all means, type it in the comment section there, and I'll be more than happy to do my little analysis for all it's worth on your asset class. If you're looking at something specifically or you want some ideas on that, we'll be happy to help out in any way we can. Whilst that's still wandering around, let's go peek at some other stuff here. A nice little sweep of the lows. I like that. No candle staying down there. Just a nice little run in liquidity. And we'll see if we start to pull back in here, or if this closes off today and leaves a portion of this open. Come back, tap that, and move higher. I'd like to see wheat either continue to roll over here and come lower, or freeze right there, create a fair value gap, trade through it tomorrow, Thursday, come back, tap it, and keep coming higher. Looking for soybeans to still hit my high here. Coffee, coffee gave you a really nice reversal here this morning. Beautiful little tap. Take the high. Now if you can get back and tap this high here, or just run through and give this a little high a tap at 375. I want to see this now, right here, and we'll change that to nothing. Right there. Come back, give that a little kiss, send her on her way. Or this, literally opened, closed above it, and opened on it and went higher. If you're watching coffee this morning, you had a nice little trade in coffee. Cocoa reaching for our upside objective now. It's bounced off of here. You did a little boxing back and forth between the two. Now we got some displacement. Did not get a retap of that old high. So you want to see it come back, tap that first before it goes higher. Or it's just going to run straight to our premium box here. Oil, that was our upside objective, right? Here, we ran through our upside objective. Look at it. Trade back into it, and then continue going higher. Next, we're looking for that 50% of this wick, right? Remember? Go back through the audio if you don't remember me talking about it. 50%. I want to see if this gets eaten through now on a close, and then start looking for 75 in the old high. So nice little reverse. You would have had this reverse here to reverse here. Either take this one or wait for the structure break, back to the order block, continuation, premium array, hit the premium array, went through the premium array, traded back into it, continuation, 50%, pay yourself. Now we're looking for the high, pay yourself. So oil gave you some really one direction and then the other direction. You see how you use these premium boxes as ideas? So it becomes from discount to premium. So can't the take profit model 2. And then when you say, let's say I'm paying myself here, you say, great. Now, if we can come back into this level, if we can close above that, anytime we come back into that, it catches me on a nice long, again, I get back in sync with the market to say, okay, we're going for old highs here. Least rejection block mid candle. When you get a big wick like that, you have to set these other objectives as well inside that rejection block. So as soon as it trades back into that, now this premium box becomes the support box for a run for higher liquidity. And if we trade back through it again, then we're looking for a run back down to the discount box. First one here, second one here, third one here. So that's another good example where you can trade one direction, then trade back against itself, find support, and continue staying inside sync with the market. That's staying on the horse, my friends. Really nice trades in oil. That was our upside objective in gold, and I'm just shy of it right now. And if I take the low of it, I bet you we're on it. I'm going to take the low of this, oops, sorry, the low of this candle right there. And I'm going to mark that one out as well. So they're kind of overlapping. I'm marking the low of that candle and the high of this candle. Sorry, the close of this candle and the open of that candle. There's a small little imbalance in there. You'll see it work when I stretch them apart. I want to see that one hit anywhere inside that little box. Let's see if gold hits there. And Bitcoin, what is that one doing? Remember, we're looking for the sticks up here for Bitcoin. It came back up in the last hour, is nailed that. So that level we saw there, we wanted to see it come back into the sticks, and it's hit them, went through them. Now we said we want to see it close above these two sticks, right, on the hourly. So you got 11 more minutes to see that close above these level. If it closes above that level, comes back and finds some support inside here, I want to see that run for this box again. And then that becomes, for me, the idea. I love drawing these little price legs out. They're not always 100% accurate, but it gets me all excited thinking, oh, that could be a nice little run. That could be the next little run up higher. If we close above here, that's where I'd be ultimately looking for the next price leg to go. But look for this, get confirmation on that, close above that one. Then you got to get above, I'd say get above 104.477. No, you'd have to get above here, 104.646. Watch where that closes. If that doesn't close above these two candles, Still bearish. I could just kick myself when I look at this one. Think, yeah, damn, we were looking at this down here. That's up $10 from here. So that's almost 50% return on your money in 1 month. Damn. 50% return on your money. Egads. And we called it. We called it. You can't take every one of them, though. You haven't got enough money to take them all. Disney is denying me the last 20, not even 20 cents. 22 to 4, so 25 cents. They're denying me that last piece. Here's another one that pays you 25% return on your money, as with this one. Looking for that run up into here. You got it right there. Almost. What's the low of that candle? 32,815. High is 32,792. So 815. We still got another few more ticks to go to fill that in. That was our upside objective. So far, so good. That was a nice little run today as well. Good call today on that. American dollar. Good call on American dollar. Euro. We're calling the Forex market today too. I love it. Looking good, looking good. And back to the slop and chop. So we have traded above the high. We've hit 300. That 300 level that D was talking about. 300 was the next upside level. We've hit the 300. Bodies are respecting the 300 level. Nice. And now you got to change in direction. We've traded below it. We did not get to trade back to it. So you want to see if it's got intentions. We want to see if it gets through this level right here. And that's all the way down to there at 279. It trades through 279, comes back into 279, 280, all the way up to 283. And then you want to see it roll over, come down some more. Clear this little fella here. Get a nice body below here now. We have got a wick. Taking out that. So I want to see this level right here. Let's see if this holds price. So I'd want to see it get below here on a 5-minute, but you've got an imbalance right here. So you want to see it get below 272. So in other words, it has to get through here. Take this structure out here, which is this candle. There's nothing super strong on this side to support price other than the busy. I like the SIBIs supporting price going lower. Watch where that closes in 2 seconds. Still inside it. So that's 5.5 deviations. Look at the 15-minute chart, he says. I see you, Hadi. I see you. So see how we're looking at the same level? That 15-minute chart, the gap you see below there is this one right here on the 1 minute. Also a little structure break. If we get a body through here, get a body come straight through support at this level and this imbalance, this whole consolidation here. You want to see a displacement get through here, like something with intention get through here though. And then you want to see that candle, once it trades below it, you want to see this mean threshold give way on a 15-minute chart, the wick, and then use that candle as support to come lower. And right now we've just come back up into the premium. That box up top here. And the fact that we're even wicking through that, I don't even like that. Again, back to my point. If it's got intentions and it's precise, it will hit it and leave. No wicks, just hit it and leave. Look at the wick. I don't even like little pokes through it. I know I'm being picky, but if you want clean price action, that's what you want to see. Right now, she's still bullish. Are you feeling the pain yet, Hadi? 260. 260 handles. We'll get it one day, Hadi. We'll be laughing. That'll be our standard approach. Do you remember when we used to just nickel and dime this sucker all the way up? Now we're hitting the home runs. Those are the ones Michael stays in. He sees it. Once he's in, that's it. He forgets all this is noise for him afterwards. He's got his objective now, a higher time frame. How it waffles around there on a 1 minute chart, he doesn't care. He's up there looking at his objective now. And as confident as you guys are as we get on these 1 minute charts, if you're just as confident on a 1 hour chart and it comes down and you look for your perfect entry, like that was a 1 hour chart, we find our perfect entry and we just go long from there and we don't care about anything else below it. You imagine doing the same thing on a 1 hour chart? It's a beautiful thing. You just got to trust it. You just got to trust it. Yeah, I like the 72 as well, but it wasn't sticking. Come on, get a punch. Let me see a nice little punch down here. Oh, Hadi, look at this candle. It's the psych candle. It's going to turn into a giant wick. No, we want to see it punch straight through here. 14 seconds. Just give me a straight down candle here. That's nice. Just tap off of this here now. Mean threshold of this candle. Come lower now. Come on down. Wait for a body to get below here. There you go. Body's below it. You come and tap it. We'll do a 1 there. Come back, revisit this. So my stop loss will sit right up above here. So now I want to see the next level down here get taken. And as soon as that gets taken, I'll move to break even. Dare I say, is this our window? Should I hope? Should I pray that that 50% is on the way? Mm, 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 mm. You pay yourself at that low or rejection block. Hold this and see right to a $400 loss. This is a just let you know that I would have taken some money here. If only a one, so I would be at break even. But I'm going to try and stop moving my stop loss too quick. So we'll see if that pans out. So here's all the different bull traps you can get into. So the first one is up to here. You trade it through it, come back into it. You can go short there. Or you can go wait for it to close below that level. It does. We went short there. Looking for this next level. There's a immediate rebalance. Not really clean one. I would prefer to see like just to come back, touch the wick. So you really have the next little downside objective for me would be right here. From a box to box perspective. I like to see that level get hit. And this becomes the next price leg lower. We can come back and tap that. I'm all right with that. That puts us right near this box. And I'm more interested in this one. Look at 15-minute chart, a D. And you want to see it close there in the next 5 minutes or so. Below that, come back inside this and continue coming lower. So this bear trap sitting here because we have no body traded below it yet. That trades back and rips right through all the stuff. This one didn't get you, but this is the next trap, next trap, next trap. We don't have any clear space until down here. So those are all little traps you're trying to jump between, and hopefully you don't set them off. So that's returning to 50% of this. there to there, 50% right there. Look for continuation. I want to see it start getting some legs here, not just waffling with wicks. That's the next price leg lower. I don't want to see it get back up here again now. That'll pay for the trade, and I'll wait. There's too much waffling going around, not a clean again. So this is what's throwing me off. It's not acting like I want it to act. Tap it. Let's go. I'm out. I'm not waiting for that to start mashing back in here. Now that it got out, it'll take off now. And we're in 12 o'clock lunch hour now too, so. Can you trade multiple micros instead and show us live how to manage the trade? The way Michael teaches Pay the Trader at 50, 80 and target, also using your back end magnet with a trailing stop loss. Sure, I could do that. We'll put some more on here. We'll put 4. Okay. What's the LHF? Remind me what LHF is again? Going higher. Oh, low hanging fruit. Yeah, it's in lunch hour now. Yeah, it does, doesn't it? We're right up in the top of it here. We've got this premium array above you here. We've just tapped that. So this premium box right here. Now I want to see if we can, and it's lunch hour. So it's either going to take off on us or just go sideways with us Lunch hour is not the time to be messing around in the charts. Actually, had a nice solid displacement candle somewhere. You want to see this revisit this HD again, this trade below that level on a 15-minute chart. See how that wick just pulled right back in there? Unless this is just pointing the direction, guess where we want to go. Wait for a close back in here, find some support at this, and start marching down lower. Paying yourself along at this order block. High open, large part of the range, 50%. If you're looking for low-hanging fruit inside here, 50% will put you right on that order block we mentioned. So you want to trade below, come back inside this. So that's in the premium. You want to sell at a discount. You do not want to see it close back above there, 272, and then start getting back down into 62%, 70% down in here. Low-hanging fruit is 50, 62. Pay yourself on the way down and leave a run around for running on the low. If you take the low, come back into it, let it continue going lower. Just trail your stop loss behind. That's a quick internal range liquidity hunt. Bull trap. All the way back up to another bull trap. You want to see if it closes below 620 or 265. And see, that would have more than come back and taken my stop loss. So that all that waffling, your instincts or my instincts tell me I don't like that. I want to see it clean, and that's just waffle. So I'm glad we got out there before it came back and took us out. Peter went short at the premium array. Good for you, man. That's ballsy. They also lowered the Lorders from 21,325 to 21,300, indicating lower for a little bit, in my opinion. I don't know what you're talking about there, Peter. You lost me, man. Orders. I'm like, Lorders. What's that? They're orders. Okay, I got you. I'm like, Lorders. Has he got some sort of, there's some royalty in here? Okay, Derek, have a good time, buddy. Take care. 5 minute looks great for a short order spelling. Wait, tape read. I use level 2 a lot. Ah, okay. You use that level 2. I don't. I've seen it. I've seen it many times when I've been buying trades or buying stocks. But that I'm somewhat of a lord of myself. What do you get below here? 265. Let's go below. Come on, Hadi, let's get down there, man. Stop mucking about. Start moving the charts. Let's get that 15-minute busy beaten and defeating. Yeah, it's got to close below here. It's banging on it right now. I just want to see if we can get below it. Do, 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 do. Welcome to lunch hour. I'll give this a few more minutes and then I'm done. I'll go on my on the Telegram and I'll chat with you guys on Telegram. I'm gonna go eat lunch soon. Are you out of here too, Russell? This is just kind of playing around inside here. You want to see Hadi's idea of the 15-minute close below that? Like a distinctive close below here now. And I pop back into that. You want to use this wick here, 50% of the wick. So you want to see it just touch that imbalance and keep coming lower. Look at that wick right there. See how the wick is holding price right now at that 72 level or 62 level. You want to see is if it's going to hold there and start going higher. You want to see it leave, find some support inside this next up close or down close candle. It's high wick or open. That's it. And you want to see it keep going higher. Or it's got to close distinctively down below this candle and that one, and then come back into that first continuation. And it just looks like it wants to go higher. We had no retracement on that 11 o'clock. And so far, no retracement on 12 o'clock. So it tells me it wants to go higher all day. That's my theory after 11. If 11 doesn't take a run back here, 12's not taking a run back there, keep going. Don't expect this. I really don't like trading after 11. This is when I lose my. I totally agree with you, Heron. Heron, I'm the same way, man. After 11 o'clock, when I get close to 12 o'clock, I start giving my money back. It starts going all choppy, and I still want to chase every single little level. And it's like, stop it, man. It's the consolidation is so tight, it just keeps taking me out. And then I start to get punch drunk, and I'm not looking at the levels cleanly enough, and I keep getting taken. So, like that level this morning, beautiful. Take it and leave it alone. Just leave it alone. Aim for your higher time frame and leave it alone. Set it, forget it. There's the tap of that old high. Now I want to see that go higher now. So we came all the way down to the discount box, tapped it, went through to the premium box, went all the way through the premium box, use that now as leverage to go higher. Take out the high, wait for a body to get above here, and use this as support and half that wick. Now look at that. There's that 50%. I'll tell you about that. Oh, sorry, the open. There's the open. Remember I was telling you about that idea? Once you trade above that high, you take the open of the next candle back to the high of the previous wick and look for 50%. Look at that. Bing. Hits it. Now I want to see if it goes higher from here. That's the little thing I've been working on. An idea I'm working on. It does indeed, Peter. So anyway, I like that 50%. And I wouldn't want to see it get back below that. I want to see that continue pushing higher now. Nice. I want to hit that and chase it. Let's put 4 right in there. And I don't want to see it get back in below here. And now this is 12:30. Again, 12 o'clock. This could be a just roll over, come back in here, and just keep beating me up in here. So if we close below here, I'm out. So I'll take off a portion at the weekly here. That'd be 350. Then back up into the consequent encroachment of this one here, which is 387. And then we'll split this up in quarters here. Anyway, that'll be it for me for the day. I'll monitor this. I'll send you guys the how this works out. Well, you'll see how it works out. Right now it's sitting down here. If we cross below this level here, I'm going to close it out before it comes back to me. I don't want to see this low get taken out again, like that order block there. So I want to see this again. See how it starts to waffle around it? Anytime I put a trade on, it starts waffling and not acting the way I want it to act. You got to get out of here. This faffing around in here stuff, not what I like to see. Okay, so anyway, that's where I'm sitting right now. I'm still looking for a long, and I like long for the rest of the day here. But that's it for me. You guys, I hope you had a great day. If you learned something, great. If you like what we're doing, hit the thumbs up. I do appreciate it. And join our group, subscribe, notify. We're here every day. I'm here for a couple more weeks, and then I'm taking some time off. So I will see you guys for another few weeks at least. And I'll see you bright-eyed, bushy-tailed tomorrow. Take care, and hop on Telegram, and we'll keep in contact on Telegram there. Talk to you soon. Take care.